All right. Well, good morning, everyone. My name is Steve Pally. I'm co-chair of Brown Rudnick's digital commerce practice. As you can tell by my accent, I am not based in London. I'm based in DC. And I'm so pleased to be here, and thank you so much for joining us for our first annual Blockchain and Law Conference. We have a great day planned for you. And I'm not going to belabor this with lengthy comments, but I guess one of the questions I was asked by people is, why are you going to London to do this conference? And what I would say as an American, if you've read the news recently, you've seen that crypto in the United States is somewhat under attack. You may have, I know that the United States is not the only country in the world that has laws, but it's a huge market. We've seen our securities regime clamp down. And one of the interesting things about London is that, one of the interesting things about England is that it's always been a center of finance. It's always been a center of innovation. And we've frankly started sending clients here. Because in the United States, we're faced with, we have a federal system, so we've got a very complicated financial regulatory system that applies to crypto. We also have state regulation. Currently, unless you want to be a very, very regulated business, and even then there's some difficulty, it's hard, it's becoming harder and harder to innovate. We see London as a capital of finance and a great place to do business. And I think the ideas that we can take from businesses here in the United Kingdom are ideas that we can apply to the United States as well. So we have a great day of panels. Our first presentation will be from Novum Insights, and I have my law partner, Neil Foster, who's going to make an introduction. I also want to thank our sponsors, GBBC, Novum Insights, Grant Thornton, and looking forward to a great day. With that, I'll introduce Neil to introduce Toby.
Thanks, Stephen. Welcome, everybody. I'm just going to introduce my great friend and collaborator for many, many years. I've known Toby for about 15 years. Toby is CEO and founder of a company called Innovation World. You'll know them as Novum Insights. Novum Insights are two businesses. The first is Europe's leading research house in crypto and blockchain, and that's probably where you know them most. And this report that everybody has got a copy of, Toby and his fantastic team have put together a report on equity finance and M&A. We'll be talking on a panel on equity finance and M&A. Toby will be talking first about the market in crypto, but corporate finance lawyers like me are also engaged and very interested in the venture capital, the funding for the businesses, the growing of the businesses behind all of that. And so that report is hot off the press. It was printed this week. All the data is about as up to date as you can get to the 31st of March. And so very, very up to date data. The last time Toby and I were speaking at a conference was, Toby, that's the week after FTX, wasn't it? And that was the last time. I'm sure you've spoken at other crypto conferences. But Toby will no doubt give some deep insights into the difference between a week after FTX and today. And the report, which we'll talk about more later, will also talk about a little bit of a rebound, which Toby will talk about in his keynote address. The other part of Novum Insights business is actually that they're starting a fund, and who better to start a fund? That fund, I believe, is launching next month or the month after that. So look out for those announcements as well. So Toby was going way back. Toby was a journalist and editor at Global Corporate Venturing, which is where I met him 15 years ago, and he was writing about digital and then crypto and blockchain and new technologies and so on, and then decided to put his money where his mouth is and leave being an employee. And he was a shareholder there too, but to start his own business. So hats off to anybody who does that. So he's, and Novum Insights was therefore born a couple of years ago. The insights that Toby has given, not only in the report, but in these keynote addresses, as I say, totally up to date, and representing what I believe is Europe, possibly wider than that, leading research and analytics house, Novum Insights. Toby.
Thanks for that great introduction, both Neil and Stephen. Yeah, no, the great thing about Brown Rudnick actually is they're both, they're our law firm, we're clients of theirs, so they sponsor our report and our 6 monthly event twice a year, and are just great supporters, and also invested in us as well. So it's rare to get an investment from a law firm, but proud to have Brown Rudnick as one of them. So I do hope you enjoy this report. I'm going to be looking at summarizing the entire Web3 and blockchain landscape, which I think is a great challenge, and it's been an interesting ride for sure. So what essentially, if you read the press, especially the Financial Times, you'll hear the words crypto blockchain crisis. I put a question mark on the slide, but in the because I think it's, you'll see from especially the sort of blockchain, not so much the blockchain activity, but some of the wider data, and there's any people who do any trading will know you could have probably 3x'd on Bitcoin and similarly on Ethereum, so, or 2x'd on Ethereum if you timed the market right in only the last 6 months. But in general, obviously, we'll see that a lot of the financing markets around blockchain and the like have declined, and we'll go into some pretty interesting reasons for that, and also what I think is the real story behind that. So this was a great privilege to be supported by Brown Rudnick to do this research. So we've essentially mapped out all of the sort of spider relationships between the 10 most active crypto investors and then all of their co-investors as well. So you begin to sort of, with some of that data, we're getting a really intimate understanding of exactly who has been active in the market, what kind of things they're doing, and then who are the sort of hidden lines behind them if you're looking to reach some of those premier firms that can lead $30, $100 million plus rounds. And I think you'll find the data fascinating. Much of it is in this report. Some of it we've updated afterwards as well. As Neil always likes the fact that we're trying to do as real-time data as possible. I think many in this room do as well. We also look at some crypto and DeFi trends, and there's a brief mention of LBFS 2023. So anyway, if you read the headlines, there's a lot of talk of a crypto blockchain crisis. Sam Bankman-Fried has become perhaps even more famous than when he was on the front cover of Forbes magazine. Now, probably a household name. And interestingly, though, what's happened is you had a peak of around 4,500 deals in 2021 and about 35 billion being deployed last year as crypto, VC, and M&A activity took something pretty interesting. Obviously, the one caveat is 2023's data is looking at effectively Q1, right? So clearly it's not the easiest thing to compare like with like. But if you look at this chart, actually in this supposedly catastrophic year for crypto VC, in fact, we're on course to hit possibly above 2020 levels if you 4 times the roughly 5 billion that's been done this year across 1,000 and something deals. Actually, the deals will be similar in number but different in size to the following years. So what that tells you is clearly, like, and we're doing a panel with some top VCs here put together by Brown Rudnick. You'll see that the wider sort of trend is possibly for down rounds and all of those complexities, and good law firms and advisors like Brown Rudnick will tell you how to navigate some of those sticky situations and VCs. And it's something that many people, certainly my generation, Neil kindly went into my entrepreneurial history. I'd been in the up and up phase. I started being an entrepreneur in VC and tech in 2011 and sort of moved around and, like Neil said, founded my own company several years ago. And it was a great market because valuations always went up. That was great. Now it's slightly more complex, and you do need good advice. And navigating that, many entrepreneurs are finding their way through. But the clearly, like 2021 and 2022 were phenomenal years in some ways in blockchain and crypto. I mean, there are a lot of froth, and what's interesting is for blockchain equity funding of businesses, we're probably going to see the same volumes as 2021 and 2022. So in actual fact, you can talk about a blockchain and crypto crisis, and later on in this presentation, I go into some of the sort of token investing landscape. But basically, people are investing heavily, and actually as heavily as last year, into the equity rounds of different blockchain companies, which I actually found pretty astounding because if you talk with most people, the landscape is parched, but for good companies building interesting projects, I think they're getting financed, and we're seeing that with people we're advising at Novum and looking at on behalf of Metalink, our fund. It's definitely a sort of tale of different circumstances. For companies with traction, product market fit, or the right tech story, the financing markets are very much open. For those that don't have any of those 3 things, or preferably all of them, it's an extremely hard landscape to raise money in. We're going to deep dive in some of the blockchain activity, and I'm also very keen for this not to be a sort of complete lecture. So in the sort of next few minutes, and as I go on, I mean, this is a 35-slide talk, but feel free, sort of remember your university days. Put up a hand if a brainwave comes to you as I'm talking. This is interesting, right? So this is the token market, and this is Ethereum. So more than $1 billion were raised last year in the token market. Actually, more than $1 billion were raised in 2021 in the token market. As Luna happened, as FTX happened, as Celsius happened, and these various different collapses, Voyager, and I know the Brown Rudnick has a good restructuring practice as well as a good corporate and blockchain practice. Clearly, the wheels were beginning to fall off the bus this year. Perhaps most interestingly, I love this chart because I look at the one on the right, which is Solana. And as many of you in this room probably know, Solana was deeply intertwined with FTX. So Solana's financings on Solana went down from 400 million in peak of the bull run to 50 million or so the following year, and probably very little this year. So it's a very interesting sort of, because clearly Solana, interesting tech, out of Qualcomm, very, very bullish. They were one of the darlings of the bull run last year and had a lot of VC money coming into it, largely driven by FTX and Alameda. And it's fascinating to see how much the activity has shifted away from them. Yep.
When you talk about investment into Solana or any of the other protocols, are you talking about VCs buying tokens, native tokens?
Buying native tokens on top of it. So effectively projects built on Solana or whatever, Orca or various of the sort of lots of projects got funding on Solana in 2 years ago, and that as FTX began to crumble, it really dried up. Is basically and similarly, if you look at Ethereum, more than $1 billion was raised in 2021 on projects in Ethereum. As many of you probably know, the token market has really begun to dry up. I mean, we've seen some pretty interesting airdrops and that kind of thing, but it's been extremely limited. So like, if you see that down curve, much of it took place in the first 6 months of last year, right? So that 250 million, if you began looking at breaking it down quarterly, looks even worse, right? And I think we had a very good pre-discussion prep by Neil with the VC panel that goes into a lot of the reasons why crypto tokens have gone down. And I mean, I'm sure many of you have played around with outs. Many of the outs are down more than 90%. So it's no surprise that a new token issuance in a bear market does very poorly. In a bull market, tokens are one of the best investments from an investor point of view, the IRR, the returns, because they go up and up and up. But they're very speculative and frothy at the moment as the token market stands. I think there's a lot of people in this room and elsewhere that are looking to make the token market more solid. And I think one of the themes, I know we've got a lot of people that have been spending time in the sort of digital assets, security token rollout, and it's always interesting to me in the bear market, those kind of projects garner a bit more attention, but it's such a sort of long-term play. And I was catching up with one of the delegates here about sort of activity in the enterprise world in blockchain, where they're using both public and private blockchains. There's just a sort of generalized activity. I may have seen a question over here, but I don't know. Len, were you asking a question or you were just moving? No, okay, fair enough. So just generally, the M&A, again, so something I've talked a lot with Neil and his colleagues at Brown Rudnick is, I think it is very much expected and happened heavily last year, right? So M&A in blockchain and crypto is likely to be a trend as you move into consolidation. But what happens in a market crisis like we saw in the collapse of FTX, Luna, Celsius, Voyager, etc., is gradually, in the early phase of that, a lot of people, and FTX was one of those big consolidators, look to kind of pick off groups that were interesting but happened to be vulnerable. But as essentially people got very scared about who had exposure to what, in the early part of this year, the M&A activity has slowed down. But as people's exposures become clearer, as it becomes easier to do due diligence, I think it's pretty likely that M&A and blockchain and crypto will pick up. Here is to my point on the last year of the tale of two halves. It was basically funding was pretty strong. You could even see as much as 7 billion being done in an individual month last year, which is pretty strong for an industry with very few revenues and sort of very much more investing on the promise and the network effects rather than actual sort of pure traction if you're wearing your business hat. But it clearly, like what I view, and I've always been a big fan of the economist Carlota Perez, who sort of has a theory on bubbles, like what you typically see in these sort of huge investment cycles in the top of the market in 2021, 2022, which, I mean, like more than 100 billion was poured into VC and into crypto and blockchain companies in those 2 years. What you'll see is some of those well-capitalized entities with very, very smart developers will build brilliant things, and some of them will immolate hundreds of millions of capital, and that's just the nature of these life cycles. So I think it's going to get very, very interesting through this year, and as we've seen, the likes of Bitcoin and Ethereum have been doing very, very well in this start of this year. There was quite a big CBDC event last night in London, so on that side of the world, and it's perhaps a question for another time, but there's a whole host of people trying to push a new form of digital money, particularly in China, but all around the world, and the Bank of England itself put out quite an interesting white paper on the topic. So interestingly, the reason, I mean, it's probably quite well known. So I had a relatively uncomfortable weekend sitting with our fund's assets that we decided one of the safest places to stick them was USDC. And some people might have remembered that Silicon Valley Bank was a catalyst for a minor crisis over one weekend for Circle and USDC. It turned out they returned to parity, but I think there was definitely heated debate between ourselves and our advisors as to the merits of USDC and where it sits versus Tether and the other stable coins. But going into like the domino effect of Silicon Valley Bank, we've obviously heard, probably many of you heard of so-called choke point 2.0, which has led to the closing down under fairly questionable conditions of Signature Bank and less questionably of Silvergate. And obviously SVB, and which especially Signature and Silvergate were some of the few on-ramps to the US. So as Stephen said in his address, that Brown Rudnick is advising many clients to come to the UK instead of the US. We're in very interesting times in terms of where that goes. And interestingly, since the collapse of SVB, we've seen Bitcoin and Ethereum and the crypto actually roar ahead, because many people are going, well, do I trust fractional reserve banking, or do I trust this new peer-to-peer finance? And the conclusion seems to be the new peer-to-peer finance is at least getting into an interesting position. And we'll talk about how the sort of inflation hedge assets have fared, including gold as well. And the charts make for some pretty interesting reading. But I think we're in a very, very interesting world when it comes to the banking world. Obviously, Credit Suisse even more dramatically. I had one of our investors ringing up. It's like, who'd have thought that Bitcoin was going up 20% while Credit Suisse was collapsing? And it was a very interesting time, at least. So, of course, this is the price graph of FTT. Had a minor bump recently for some weird reason. I think the administrators felt that they might be able to recoup all the assets, and crypto is always one to buy the rumor, sell the news. And I'm sure you can get some insights from Brown Rudnick on this kind of thing. But the real story, and I think this is the interesting thing. So I framed it in terms of sort of the doom and gloom you can hear about crypto and blockchain in the media, is in fact, this is looking at the 5-year returns of Bitcoin and Ethereum. Effectively, backing both assets, you would have more than quadrupled your money, close to 5 times on Bitcoin. Gold did a nice 60%, and it's got some interesting sort of correlation performance, but you really, really struggle going back over a 10-year period to find many better assets than Bitcoin and Ethereum, which is a really, really interesting point of view, because you'll often sort of get lectures by people who haven't looked at the data on oh, this thing is very untrustworthy, and what's backing it, and what's the network effect. But the pure data that if Bitcoin was a company, I think it would have outperformed Tesla, which back in the bull run was one of the most successful businesses. Stephen. Yeah.
You used the word correlation.
Yeah.
I think one of the questions I've had in my mind for a long time is Bitcoin a correlated asset? And if it's correlated, what is it correlated with? And that chart that you showed, is that going to prove to be an historical anomaly, or can we use that to predict the future performance? And if we can, how do we do that?
Yeah, well, so, okay, this is looking at the correlation of gold, the NASDAQ, S&P 500 to Bitcoin. It's a mess. So sometimes, like at the moment, all 3 assets, if you go to the far right of the chart, gold, the NASDAQ, and the S&P are all going up in unison, right? Their correlation is close to 1. So in certain market environments where for whatever reason, especially when the sort of animal spirits get together, the things go up in unison. What gets very, very interesting about all of these assets, and one of the deeply troubling things, I think, for crypto enthusiasts in 2020 and 21, or at least crypto enthusiasts who liked thinking about numbers and correlation, is effectively, during a lot of that bull run period, the NASDAQ and crypto especially were massively tied. But as I think you can see quite dramatically, gold, extremely interesting. I mean, clearly an uncorrelated asset. Nowhere near as exciting, but an interesting, from a sort of mathematical risk perspective, certainly an interesting asset to hold in your portfolio. But as you can see, it is kind of a mess in terms of and I think that is a good thing, really. I mean, we want Bitcoin to not just correlate to the NASDAQ, because at the end of the day, it becomes slightly pointless, right? It just becomes a NASDAQ derivative. I think it's the way it's performed actually is it's certainly showing some very interesting characteristics, but perhaps not as many interesting characteristics as your Bitcoin maxis or whatever who believe in Bitcoin as hard money might want you to believe, kind of thing. So, and now Dr. Len is actually asking a question.
Back to the previous slide where you've got Bitcoin and Ethereum. Now, I believe in the USA, some kind person say that Bitcoin is a commodity, right? Is Ethereum a commodity or a security? And what can you say about other tokens that might be in the field? What are the risks and what are the opportunities?
Oh, wonderful, wonderful. Okay, well, and I'm sure Stephen and colleagues can give you chapter and verse on the complex US regulatory landscape. I found it hilarious watching Gary Gensler be grilled in front of Congress this week, and it was a video has gone viral on LinkedIn of a congressman pointing out that exact point, and it's extremely confusing for anyone to do business in the US linked to crypto and blockchain, just because the CFTC and the SEC and all sorts of obscure acronym regulatory bodies in a turf war to regulate crypto. And I think many people largely expect, just because that's a very lucrative area where they can get fines and all these kind of things. And it's classic regulatory overreach, sounding like an arch-libertarian, but in some ways, for a big believer in the power of US capitalism and sort of what it stands for, working in crypto and blockchain, it's always been very disappointing to try and go like, there's all these different bodies that are actually duking it out to do a power grab. So I tend to think that Bitcoin and Ethereum are a commodity, but we're probably the better people to ask are our hosts, because I'm not a lawyer, and all I can say is from my anyway. So I can't really dive into that too much, but I'm sure the topic will come up later. So I hope I've answered all that question, but I think it's half answered. Well, what was the second part of the question?
Risks and opportunities.
Oh, risks and opportunities. Yeah, no. So, yeah.
Risks that might be regulated in a different way or the same way in Europe versus America or goodness knows.
No. Okay, that's a really good question. So from a trading point of view, it's extremely interesting, right? Because it's the classic, like it's a rumor-driven speculation frenzy, right? So you essentially have, obviously that uncertainty is always incorrectly priced by the market. So from a speculator's perspective, there's a huge amount of opportunity, which isn't actually what you want in a real functioning economy. But clearly, like we've seen Ripple, which sadly has been really hobbled by some of the regulation that's gone on there. And Ripple was once a sort of mighty force, and now is just really massively caught up in this huge protracted legal case. So I think there's a huge risk for technologists that the chain that they're building on is caught up in something that is a long, protracted regulatory battle. I kind of feel, I feel instinctively that the SEC especially is looking more and more intellectually incoherent. So the I think the big opportunity is we're going to see new definitions by many of the smart people in this room of what crypto assets actually are, what securities are, what commodities are. And I think they are very much, we're working on sort of 19th century, 20th century paradigms to explain 21st century phenomena and the token market.
I was thinking about taxation. If every transaction is going to be taxed somewhere or another, it'll affect people's profitability, etc.
Yeah, and probably will be welcomed in CBDC world by the Chancellor of the Exchequer and the like will be extremely happy to be able to have hugely transparent insight into all of people's transactions and earnings. So, and in some ways, I mean, it's good for fairness. Perhaps involves too much trust in the state, and certainly, I'm sure many, we all love paying tax, of course, but it's perhaps not so comfortable for people who like the current system where you're able to take a view and get smart insights from the lawyers and the accountants here and that kind of thing. So anyway, moving to the topic of how these things are performed, this shows clearly, I think what this chart shows to me is gold at least in the last sort of inflationary times that we've lived through, has been a very, very interesting asset. However, in terms of returns, it's nowhere near as exciting as crypto, right? Like the crypto is just has been a phenomenal thing as we're worried about many sort of, I guess, the nature of fiat currency. We're worried about the way economies are being run. We're worried about how the Federal Reserve and the Bank of England and in QE world, Bitcoin kind of did its job, and it's a very, very interesting thing, and I think it always is like I know so many people that like the moment that Bitcoin was hitting 10K or so, were just going, this is rediverting as many assets as they could towards it, and clearly have been proven right, at least in the short term. So I think certainly an interesting world, and we went through the correlation graph with Stephen. It's very muddy, but I think this actually gives you a good case for crypto as an asset that sometimes doesn't massively correlate with the NASDAQ, but can do as well. In the overall crypto markets, you've seen Bitcoin moving to have a lower market share, but typically, interestingly, lately we've been going on a bit of a Bitcoin dominant run. And I've been spending a lot of time. I think Bitcoin at the moment is going under a bit of a renaissance. Because with Taproot, you've had the ordinals come out, and we've been advising a very interesting company in the ordinals space that allows you to inscribe onto Bitcoin, which basically storing data into Bitcoin as the most decentralized data protocol in the world. And so suddenly you've got a form of an AWS IPFS competitor emerging in the shape of Bitcoin, which in turn is driving Lightning for sort of like super sharp things. So obviously on Ethereum itself as well, we've had some amazingly positive news with the Shanghai upgrade, and now you're able to stake Ethereum and withdraw. Previously, you had to sort of trust in Vitalik and wait a couple of years to be able to withdraw there. This report will go in depth into who's active in the market, but I'm going to go through some of these slides. So this is pretty interesting. So this is looking at activity in 2018, 2019. Clearly Pantera, DCG. So very, very interestingly, and you'll see why in a second, DCG was a big force in the early 2018, 2019, very high returning era. A16Z, Blockchain Capital, Multicoin Capital, a lot of interesting groups. A very interesting group called Animoca Brands was in the horizon, and FTX didn't even exist at that time, and Coinbase was obviously chucking its weight around. What starts to get interesting, and I think this chart is pretty interesting, look at the tops of FTX and DTG, which is showing this year. So unsurprisingly, FTX has been out of the market. Probably unsurprisingly, DCG has been out of the market if you know anything about the interrelations between Grayscale, which is the attempting to be a large Bitcoin ETF, but has run into some turbulence there, and problems around Grayscale were and are probably one of the major things weighing on the crypto market in terms of, again, that US adoption that was being referred to. But interestingly, like Pantera, A16Z, Blockchain Capital, all these groups are pretty open for business. Even Animoca, which got caught up in a very, I guess, the most frothy area of crypto last year, the metaverse area, Animoca were the game in town. They've kept pretty active. And you can see, and feel free to study this in the report, there's an interesting sort of thing of strategy. I guess the biggest corporate VC in this list, Coinbase Ventures, has been investing pretty heavily in its portfolio into blockchain services, which I think probably unsurprising, looking for things to help grow its top line and bottom line. But this is a good one to dive into. Clearly, like it's looking, basically the graph is looking by year. So what's interesting, historically, there was a huge amount of money poured into blockchain infrastructure. Now what we're seeing is people pour money into different derivatives building on top of the blockchains. And basically starting a new protocol is going to be hard work. But also very detailed breakdown of the relationships between the likes of Pantera Capital, Coinbase. Pantera basically invested very heavily with Coinbase, digital currency, and Boo-Hiss, Alameda, among others. You can see whose syndicates are in certain difficulty. So Blockchain Capital, biggest exposure to digital currency group as well, closely involved with Alameda. So there's an interesting vacuum coming in. Obviously, Polychain, interestingly, didn't come in the top 10 from our research, but is a massive crypto fund out of the US. But in any case, do have a read of this report. A lot of this data is in there. Yeah.
So we were talking earlier about the US being hostile to crypto.
Yeah.
Do you see more of this investment coming to Europe and the rest of the world in the next couple of years? Or do you think that's still focused on the
I think 100%. I think clearly capital, tech capital sits often in the US and Asia, right? Like Europe, sadly, we're often, but I mean, you only need to know, I mean, I'm sure many of you have been building businesses in the crypto blockchain space. There are many great programmers all across Europe. And I think one of the great things about crypto and blockchain is it's probably accelerated the decline of Silicon Valley. I mean, it's kind of interesting. And I don't want to crow, but I think from a global innovation perspective, moving pockets of capital for it. Back when I started doing tech entrepreneurship, London was probably one of the second best or third, fourth best place to grow a business. Now, capital is truly global, both in crypto and blockchain, but elsewhere as well. But all of these slides are in your report, and we'll be sending out a lot of this data as well with the Brown Rudnick team. Interesting one here onto the panel. As you can see, the token world has dried up. Anyway, thank you. We'll be discussing these trends further at our London Summit, which is also supported by Brown Rudnick. Fantastic. Thanks, Stephen.